later this week, the largest bank in the region by assets will release its full year results for 2019. Let's explore what you can expect, not just from KCB, or rather Kenya Commercial Bank, but also from Kenyan banks this year. We're joined by Muathi Kilonzo. He's the head of Kenyan Equities Trading at EFG Hermes. Great to have you on the show.
Sure, thank you.
With us, Mr. Kilonzo. Now, of course, rate caps were in place for about 3 years. Give us a sense of who amongst those 10 listed banks emerged in best shape once we saw those taken away, and of course, who are the best positioned for the return to an open market?
Look, I think over the rate cap era, the banks that managed to reduce their cost of funding, so the banks that could mobilize deposits at a cheaper rate, are the ones that would benefit. So those are the likes of KCB, Equity, Co-op, because they have a large branch network and a large distribution network. So those were in a strong position. But also the banks that invested in IT and digitizing their channels, which reduces the cost of serving a customer. Which means that when rate caps were removed, but the central bank continued to cut interest rates and their margins were squeezed, at least they're actually earning a return because they are have a low cost of serving their customers.
But we did see double-digit jumps in bank shares, especially after those rate caps were removed. What is your take on whether that rally was overdone, especially because we've seen the CBK sort of holding the banks back from increasing their lending rates?
I would actually argue that the rally didn't go far enough. I mean, we were expecting KCB to get somewhere nearer to 90, so high 80s. Equity Bank also to rally strong. So actually, I think what you've seen is that the current risk-off trade that's going on globally has impacted the rally of these banks, and it's, of course, you can't expect them to be isolated. But I don't think it was overcooked. I think actually that there's still quite a lot of headroom for these banks because now they can price risk, they can actually grow.
Right. Now, of course, we're heading into results season for the banks. What's your outlook after, given your point of view, what's your outlook for those results, especially Kenyan Commercial Bank? What do you think?
Look, I think when we look at KCB, we're expecting that to start to see some fruits from the rate caps being removed. Obviously, they were removed towards the end of Q4, so we're unlikely to see that. But it would be interesting to see what management says on their expectations of loan growth. I think that's an interesting one. Would like to know what they've done with their government book, because obviously would see them unwinding treasury bills and start lending to the wider economy. So I think their expectations around that will be very interesting. And also to get a sense of what sort of demand they're seeing for credit, and also to see at what price that demand is as well. So I think those will be very interesting trends to see. I mean, we saw one of the banks that has released so far that they were expecting 10% loan growth this year, which is better than where private sector credit loan growth was. I mean, it was sort of in the high single digits. So if it grows to 10 and plus, that's a positive.
Well, especially looking at KBC, its shares have fallen about 13%. So what do you think is behind that drop, though? Do you think there's a more fundamental concern? Could it be that foreign firms are sort of fleeing the market?
I think preceding current events globally, you had a bit of profit taking, naturally. I mean, the stocks had moved quickly over the last 4 months. But now, given the environment, what you're seeing is that, given that the market is 60 to 70% driven by foreign portfolio managers, what you're seeing is a risk-off trade, and that usually hits the more liquid stocks. So these are the stocks that are easy to get in and out of. So that's where the price reacts. And you can see the flip side of that. When rate caps were removed, this KCB in particular was a name that moved very, very quickly. So you'll always see that it will be three names. It will be Safaricom, KCB, Equity, will be the sort of leading the charge on the way up or the way down.
Well, what are the main macro trends you're watching for this year that, of course, will inform the performance of banking stocks this year?
I think we need to see where interest rates come. We need to see where the shilling settles. We need to see also the global outlook is really important. If oil stays at the $30 level, clearly it's good for Kenya in the long term because we are an oil importer. So our import bill will go down. That's good. But at the same time, if Europe goes into recession, you're looking at flowers, you're looking at tea, you're looking at tourism. So some of our large exports actually will suffer. So it's I think this is a very cloudy outlook, and you can see the markets are pricing that in. It's very hard and it's very volatile. But I think we need to see what our key trading partners do, And we also need to see what the government does. Obviously, there are budget deficits to work out. We need to look at their spending, and we need to see how that evolves.
Well, we do have to leave it there. Many thanks for joining us in the
much.
studio. That was Muathi Kilonzo from EFG Hermes.